What's up, guys? Welcome back. I'm Kenny, and this is my show, The Next Multibagger. Now, as you can tell, I'm really excited to bring this episode to you guys today, as I've been wanting to invest in this company for a while now. Now, I'm sure you already know since you clicked on this video, but the company I'm going to be talking about today is Sofi. Now, our man's Chamath is bringing Sofi public via his SPAC, IPOE. Now, for those of you who don't know, Chamath is a very popular venture capitalist who's been absolutely killing the market in 2020. Now, I've been following him pretty consistently, and knowing that he's backing this company makes me even more bullish about its long-term prospects. So what I want to do in this episode is break down exactly what Sofi is all about, their financials and valuation, their long-term prospects, and exactly what I'm going to be doing with this stock. With all that out of the way, let's dive right into exactly what Sofi is all about. Alright guys, so I'm going to kick this off by first talking about what Sofi is and some of their products. Now, Sofi's mission is to help members achieve financial independence and to realize their ambitions. Now, their job is to get your money right. And they're able to do this by providing comprehensive solutions tailored to members' unique needs to borrow, save, spend, invest, and protect. So they're really trying to hit on that they can help you achieve your financial independence. Okay, so why Sofi? What sets us apart from other fintech companies? Well, they claim that their key point of differentiation is that they have a member-centric approach and sensibility in order to build a trusted relationship and to show that their products are better when used together. Now, they offer a fast way to do everything, offer a broad selection of products across the member lifestyle. Now, they have content to help members via both Sofi and non-Sofi brands, and they offer convenience, providing the most convenient experience from ease of use, anytime, any platform, in any place. Now, they're split up into three business segments. Their cash cow and what has been driving their most revenue is their lending business, which offers student loan refinancing, personal loans, home loans, and in-school loans. Next, they have their technology platform, which has primarily been driven by their acquisition a few years ago of Galileo. They also have 1/6 ownership of Apex Clearing. Lastly, this is something that they're now focusing on and is seeing pretty fast revenue growth. However, it's still a very small portion of their business is financial services, where you're able to invest, protect, have credit cards, and so much more. All are at different stages of the growth trajectory and life cycle. Now, as we talked about earlier, lending is their largest part of the revenue, and it's projected to see about 25% compound annual growth rate at a 58% gross profit margin. Now, their Galileo technology platform is expected to see 55% compound annual growth rate at a 62% margin. And lastly, their financial services, which make up a very small portion of the revenue, is projected to see 153% compound annual growth rate, and it's on its path to profitability. Now, the Sofi strategy is a member experience and a full suite of products that leverage the FSPL. Now, the FSPL is a financial services productivity loop, which is a strategy where building trust and relationship in the first product helps drive success in the next, resulting in higher lifetime value and lower customer acquisition costs, which in turn help result in their competitive advantage. So you can see some of Sofi's different customers ranging from Amazon, Facebook, Spotify, Airbnb, and they believe that the fintech opportunity is a winner takes most, and they believe Sofi is really well positioned to do well. Now, one of the big things about the fintech industry is that there's many different overwhelming and siloed choices. We can see that there's many different options ranging from college and payroll, financing credit and savings, and you can just see how many different companies are working in this space. Sofi is really trying to be the centralized platform for one-stop shop to be able to do everything. Now, Sofi's innovations are taking share from the most established market leaders. Looking on the screen, we see a lot of different financial service companies, and many of them are working on first-generation technology, primarily built in the 1950s and 1960s. Sofi believes that they can tap into this market, and if they become the leading technology platform, they have a big opportunity ahead of them. Now, Sofi is a full-service customer financial services platform. You can see the wide range of different products that they offer, from student loan refinancing, personal loans, in-school lending, all the way to Sofi Invest and Sofi Money. Now, we're looking at a chart of Sofi's unique members, and they're projecting over 3 million members by next year. They're currently at 1.7 million. However, each quarter it's increasing pretty healthily in the double digits. Now, one of the great things to see about Sofi is that they have growth compounding rapidly via cross-selling. Now, 65% of their home loans come from existing members, and 1 in 4 new product sales come from existing members as well. Now, that's really good to see as they're able to easily cross-sell to their customers and they don't have to spend so much money acquiring new customers. Now, as you've seen with many different tech companies, data has become an invaluable goldmine of information. And SoFi believes that they have a growing data moat and a risk pricing advantage. We can see this is their life cycle through more data gets them new customers. And it's a continuous loop to be able to help generate their business value and their long-term success. Now, SoFi is already a primary leader in the enterprise banking infrastructure. You can see some of the different apps that run off of SoFi. Now, one of the ones that you guys are most familiar with is probably Robinhood, as it powers all of their backend. Now, SoFi is turning a cost center into a profit center through their acquisition of Galileo, the kind of growth rate that it's been seeing in the past 2 years alone. Now, SoFi is claiming that they're building the next diversified financial services company. Now, they have lending, which is essentially their cash cow and their main source of revenue. However, they are trying to focus on the customer and enterprise side of things. By offering financial services and their Galileo tech platform, they believe that in the future, they can be a very diversified revenue business, which in turn would help them grow exponentially. Now, SoFi is really trying to stress to us that customers are left using multiple accounts given the lack of an integrated one-stop shop on a digital platform. Now, out of my personal experience, I do have several different bank accounts as well as brokerage accounts. And I do feel like there is a need for that because there isn't really an answer for one place to do everything. Now, I personally have never used SoFi before. However, I have heard from friends and family that they do like using the application. Now, SoFi claims that they're the only company providing this solution today in one app. Now, just taking a brief look at their management, I'm pretty impressed. They do have a lot of notable people on their board. Now, Anthony Noto is the CEO, and he has a pretty impressive background. Now, he was a managing director at Goldman Sachs. Then he became the CFO at the NFL. After that, he moved over to Twitter and became the COO, or the Chief Operations Officer. And then he moved over to SoFi in February 2018. And from then on, he's been the CEO. We can look all across the board on their management team, and they all have pretty strong and reputable background. Now, as we talked about it before, SoFi uniquely offers a full suite of different financial products all in one app to help members get their money right. Now, this is a quick timeline of SoFi's product offerings. In the first quarter of 2019, they launched Money, Relay, Invest, and Home Loans. After that, they slowly rolled out in-school loans, credit cards, and in the last quarter of 2020, they released SoFi Awards. Now, SoFi believes that their technology and operations help them have faster innovation, lower costs, more data, and iterative testing. We can see that their technology infrastructure is really the backbone leading up to everything. And them being a full stack helps them drive all these different benefits, which in turn help them launch 5 new products in 12 months at a lower cost. Now, they acquired Galileo, which is essentially their technology platform, and it's been seeing really robust growth over the past 6 quarters. Taking a look at their financials, they're seeing accelerating revenue growth in 2021 with a strong incremental adjusted EBITDA margins through 2025. Now, we can see the revenue growth is very healthy, as in 2019, it was about 87%. In 2020, it dipped to 38%, but after that, they're planning on seeing an acceleration back to 58% of next year. Now, their adjusted EBITDA as of last year was negative 66 million. However, this year, they're targeting positive 27 million. After that, in the next few years, they'll see a substantial increase in their bottom line, which is really good to see in a fast-growing company. Now, SoFi is on track to exceed 3 million members in 2021, which is a 75% increase after 6 consecutive quarters of accelerating year-over-year growth. They've seen very healthy growth. However, in the past year alone, it's accelerated quite a bit. In the first quarter of 2021, they saw about 54% growth, and today it stands at 75% growth. So they're definitely seeing a lot more adoption and a lot more need for their platform, especially in a digital age. So this is really the breakup of the diversified revenue streams. As of 2020, about 83% comes from lending, 17% comes from tech platform, and only 2% comes from financial services. But if we forecast this to 2025, we can see that only 43% would actually come from lending, 25% from the tech platform, and financial services would actually take 32% of their total revenue. Now, as of 2020, their adjusted net revenue was 621 million. However, in 2025, they expected to be 3.7 billion. Now, I just wanted to show this slide for those of you who wanted to look exactly into the numbers, what they're planning on forecasting for the next 5 years or so. Now, if they're actually able to hit these targets from about 43% revenue growth, as well as 32% EBITDA, I really like this company. I think it looks really healthy and it makes me really excited to be investing in this company. Now, their multi-product usage leads to the best-in-class unit economics and a greater lifetime value for each member. I'm not going to go too deep into the numbers, but I think the most important thing to get out of this is that they believe that their combination of money plus loans drive higher lifetime value relative to standalone offerings. In other words, that means that once they're able to get their product in the hands of the customer, they're able to cross-sell and upsell them, which in turn helps them have a much higher variable profit and variable profit margin than a lot of other companies. We can see if they just had their first product, their variable profit margin would be about 34%. However, if they upsell them with personal loans, that variable profit margin goes up to over 80%. Now, their home loan cross-buying momentum also helped drive $30 million in revenue in just $1 million in acquisition marketing. Now, you can easily see that they're driving a lot more volume in revenue and increased sales capacity, while in turn also reducing their acquisition costs. What this does is help them have more variable profit. Now, Sofi is really trying to hit the nail on the head that they're continuing to cross-sell, which is really helping their business in the long run. 1 in 4 of their product sales come from cross-buys, which is really good to see. And we can see home loans, investing, and relay all are seeing really substantial growth of their cross-buys. At the very start of 2019, it only had about 17 million total accounts. But in Q3 of 2020, that number was up to 50 million accounts. Now that's a really healthy growth rate in less than 2 years alone. Now they're also seeing unparalleled growth in premium financial services. We can see that they're seeing about a 43% compound annual growth rate since 2020. They're projecting a 43% compound annual growth rate from 2020 all the way to 2025. Now, the revenue is primarily coming from B2C lending. However, they are trying to focus on their tech platform and their financial services as well. Now, the tech platform only takes about maybe 15% of their total revenue, and financial services is a very small margin. However, it is growing very rapidly, and we're going to be talking about that very soon. Currently, right now, Sofi is not profitable. However, they do plan on reaching profitability in the next year. We can kind of see the profitability trend that they're projecting, and right now it's only about negative 11% of their EBITDA margin, but next year they're planning on positive 3%. After that, 17%, and we can see after that it's a consistent healthy growth rate after that. Now, talking about their valuation, we can see that as of the entry of about $10, the post-transaction equity value is about $8.7 billion. Now, this is about 20 times their fiscal year 2023 price to earnings and 9 times their fiscal year 2025 price to earnings. They're projecting about a 43% 5-year compound annual growth rate. Now, the valuation shows that with an illustrative share price of about $10, they have about 865 million shares outstanding, which in turn makes it about 8.6 billion in pro forma equity value. 74% would actually come from existing shareholders, 14% from PIPE investment, 9.3% comes from IPOE public shareholders, and 2.3% comes from IPOE sponsors. Now, they're targeting higher earners that are not well served yet, that are ages 22 plus, predominantly earning over $100,000. Now, their unique offering of comprehensive suite of products and services offers everything that you would need in one place. Now, they believe that their technology is next generation, and with it being a fully integrated tech stack in operations, it in turn helps drive their business value even further. Now, one of their key competitive advantages is their financial services productivity loop, where they're getting more data to acquire more customers, and with more customers, they're able to cross-sell and upsell them, which in turn reduces the cost per acquisition and helps with their total lifetime value. Their actionable data from an ecosystem of products across lending, financial services, and payment processing. So I know this video is getting a little long, so I just wanted to share a quick summary of the investment thesis for Sofi. Now, this came directly from Chamath himself as he posted it on his Twitter. So in summary, incumbent banks have been hamstrung coming out of the great financial crisis. Now, their legacy technology, in some cases, is 50 to 70 years old and has limited capacity in an increasingly digital native world. Now, innovation is emerging rapidly to disrupt these legacy banking practices. Now, what customers are really looking for is a service that offers low to no fees, fair and transparent lending, and multiple products in a one-stop shop for a variety of customer financial needs. Now, looking at the qualitative aspects, Sofi has built a suite of best-in-class digital solutions to help customers get their money right. Now, they have thousands of ratings on the App Store with an average of 4.8. They currently have more than 1.8 million unique members in 2020, expected to grow 3 million members by 2021 alone. Sofi has this full suite of lending products and financial services, which has driven increasing adoption and sequential quarter-over-quarter growth in the past 6 months. Now, their main product is their lending. However, they are diversifying into financial services as well. They're also the leading enterprise banking infrastructure platform for other fintech companies. Now, I was listening to Chamath's interview on CNBC. I recommend you guys to go check it out. But he coined this as the AWS of fintech, which is their Galileo tech service. Now, it provides the core banking infrastructure that not only powers Sofi, but other leading fintech companies, including, as we all know, Robinhood, Chime, and many others. Now, on the qualitative side of things, they offer the best-in-class cost per acquisition cost and churn, allow for best-in-class contribution margins and rapid growth. Sofi was significantly able to upsell their current customers, with 65% of home loan sales coming from existing customers and 24% of new product sales coming from their customers. Now, the revenues are scaling pretty rapidly, with 5-year compound annual growth rate forecast to be 43%, and they're forecasting profitability into 2021, with EBITDA margins approaching 32% by 2025. So their valuation looks actually pretty attractive, as their enterprise value is about $6.58 billion, equity value $8.65 billion, which is in turn a 6.7 times 2021 enterprise value to revenue. And I had to throw this in there for those of you who didn't know, but Sofi actually has their own stadium. Now, they sponsor the brand new stadium built in Inglewood, California. It's the first indoor-outdoor stadium to be constructed, and it's not only home of the LA Rams, but also the Los Angeles Chargers. It's expected to host a variety of events year-round, including the Super Bowl in 2022, the College Football Championship game in 2023, and the opening and closing ceremonies of the Olympic Games in 2028. Just having Sofi's brand on this state-of-the-art stadium, who's hosting a whole bunch of different important events, only makes me more excited about the company as more and more people start to learn about what Sofi is and what they're all about. Now, I think it's a brilliant idea that they sponsored this stadium, as it's now slowly starting to be used, and it just lines up perfectly with the timing of their IPO. Now, I saw this tweet from Chamath about a few weeks ago, and it just made me laugh out loud. I really do think this guy is a visionary, and I would love to get invested in some of his different companies. Now, prior to this video, I haven't been invested in any of his companies. I was looking at IPOE, which is Open Door. However, I didn't take a stake since I already have an investment in Redfin. Now, Chamath in his tweet said he invested $370 million of his own money, and by the end of the year, it was worth over $2 billion. Now, this is the kind of bet that I want to take. I want to take a bet in a visionary who is bringing a great company to the public market. I'm just really excited to see where Sofi goes in the future. So I'm sure you guys can probably tell, but I'm pretty bullish on this company. So you're probably asking, okay, Kenny, now what are you going to do with this stock? So I initiated a position today, and I currently hold about 744 shares at an average cost basis of about $18.06. Now, I typically don't like buying on the first day of the announcement, as it typically is really volatile and it runs up quite a bit. However, I've been tracking this company for a while now, and not only the fact that Chamath is invested in this company, but its valuation looks pretty attractive, it really compelled me just to build a position. Now, sure, I could have waited for a bigger dip in this company before I bought in. However, I think that's a loser's game. Now, in my beliefs, I would rather buy into a company as soon as possible when I have the conviction to do so. Now, I watched the investor presentation earlier in the morning, and once it finished, I realized that it was too good of an opportunity to pass up. Now, don't get me wrong, the stock could definitely drop within the next couple weeks or so. But if it does, believe me, I'm going to be buying more shares. In my personal opinion, I think getting this company under $20 is a steal, and it's a great opportunity to add a very strong fintech company into your portfolio. Now there we have it, guys. That was my breakdown of Sofi. Now I want to make this episode for you guys as soon as possible because I know this is going to be getting a lot of attention. Now I want to give you guys factual information so you guys are able to make the best decision for yourself. I was actually in the middle of editing my video for Jumia, which, stay tuned, it's going to be a good one. However, I knew when this came out, I had to make a video on it. Well, you guys just saw what I did with the stock. Let me know in the comment section down below what you guys think of the stock and what you guys plan on doing with it. Now, if you guys like content like this, go ahead and smash that like button for the YouTube algorithm, and go ahead and hit that subscribe button and notification bell. I have a lot more great content in the pipeline for you guys, so stay tuned for the next multi-bagger. Alright guys, thanks for sticking around, and let's go get that bag.